Jennifer Breen, and I will be informing you on why International Business Machines Corporation is the top pick of the Dow Jones 30 companies. To start off with a brief company overview, IBM was founded in 1911 and is an American multinational technology and consulting corporation. They manufacture and market hardware and software and also offer infrastructure, hosting, and consulting services. Some of the high points for IBM in 2012 was it had the highest return on equity of all the Dow 30 companies at 85.153%. Its economic value added was the second highest, right after Walmart at $7.8 billion. Its equity multiplier was slightly higher than the average for the 30 companies at 5.5. Its beta was less than 1 at 0.857. Its one-year returns were higher than the average at 9.38%. IBM's profit margin was higher than average at 15.6. Its current ratio was around the average for the Dow Jones 30 companies at 1.1. While even though this company was slightly more leveraged than the rest of the 30 companies, it was able to comfortably meet its obligations and remain liquid. Its times interest earned ratio was 46.9. Looking into the company's return on equity, this graph shows the trends over the last 6 years through 2007 through 2012 compared to two other companies of the Dow Jones 30. These is McDonald's and Johnson & Johnson, which also are in the top 5 performing companies of the Dow Jones. As you can see on the graph, IBM's return on equity consistently was higher than the other two companies over the last 6 years. And during 2008-2009, for the economic crisis, IBM was not affected like the other companies, and their return on equity is trending upward. This graph is showing the return on equity over the last 6 years versus two of its competitors in the industry. These companies are Hewlett-Packard and Dell. As you can see, IBM has consistently outperformed the other two companies on their return on equity. This graph is showing IBM's economic value added trend over the last 5 years from 2008 through 2012. As you can see, its economic value added took a dip in 2008-2009 during the economic crisis, but has trended upward and is the second highest of the Dow Jones 30 companies right after Walmart at $7.8 billion. Looking into the company's equity multiplier over the last 3 years, even though it was slightly higher in 2012 than the average for the Dow 30, over the last 30 years it has remained relatively constant and is still remaining the average of the Dow 30 companies. This graph is showing the risk and return comparing IBM to other companies in the industry, where risk is defined by beta and return is defined by return on equity. As you can see, IBM receives the highest returns for given level of risk. It also is receiving higher returns for companies with less risk and more risk. This graph is showing the risk versus return for IBM versus other companies in the Dow Jones 30, whereas risk is defined by beta and return is again defined by 1-year returns. As you can see, IBM is receiving the most return for a given level of risk. It is also receiving greater returns for companies with less risk and more risk. This graph is showing IBM's stock price over the last 5 years from 2008 to 2012. As you can see, it is trending upward, and based upon these trends, it is suggested that it will continue to trend upward in future years. As of April 5th, 2013, its close price was $209.41. Its theoretical price, given by the dividend discount model, is stated at $221.49. Its target price is calculated at $229.01. So given this information, IBM is undervalued and is definitely a buy. Looking into their profit margin trends from 2007 to 2012 versus IBM, McDonald's, and Johnson & Johnson, IBM profit margin was not the highest out of the other two companies, but it is trending upward, whereas Johnson & Johnson's was a little bit more volatile over the 5 years, and McDonald's, it trended upward, but it remained constant and looks like it may be trending downward in recent years. Looking at its times interest earned ratios over the last 5 years, IBM's is consistently higher than Johnson & Johnson and McDonald's. Comparing the times interest earned ratios over the last 5 years to Hewlett-Packard and Dell, it is also consistently higher over the last 5 years compared to competitors in the industry. This chart is showing the supply chain analysis as given from Bloomberg. IBM has 396 suppliers and 349 customers. Further analysis shows that Microsoft is one of IBM's customers as well as competitors. Many people may see this as a weakness for the company. However, the percentage of revenue received from Microsoft is only 0.04%. In 2008, during the economic crisis, IBM committed to continue their supply chain social responsibility initiative, where they committed to getting suppliers worldwide to maintain being a socially responsible company. In summation, IBM is the top pick of the Dow Jones 30 companies because it received the highest return on equity for a given level of risk in 2012. Its economic value added was the second highest of the Dow 30 in 2012 at $7.8 billion. Its stock price has steadily gone up, and these trends show that it will increase in the future. Thank you.